Today I want to talk about last component in our HBC trading strategy. If you didn't watch previous videos, this is actually HBC Trader strategy. Here you have a simple explanation of framework and introduction in every and each of component. As you can see, right now we have 4 of them, and RSI is last one. Let's back to the RSI. As you can see, RSI is attached on our chart. There is many ways of how you can use RSI, but in this presentation I'm going just to explain you how I'm using RSI in our strategy. The best analogy would be if you are driving a car, you start the car, you start driving. This is like you are looking to enter the trade. You are driving a car and you are checking everything, you are checking mirrors, this and that, and RSI is just to check the temperature of the engine and let's say indication on the dashboard for oil. You're just driving and you just check it, and this is nothing special, but I like this indicator. I'm using it for a long time, and I find it that it's helpful for me. So let's back to our example. On the chart we have gold at 1 hour time frame. So this is how I'm using RSI. It's very simple. So what I like to see, if the price is reaching moving average 200, in this case there is also previous daily high, but doesn't matter. If the price is reaching moving average 200, what I like to see is that RSI is high, above 70%, which means this is overbought area, and after price start to go down, after the price break this 70% and start to dive, this means that we will probably have some kind of bearish trend. So as you can see here again, this is moving average and this is RSI. It's the RSI is in overbought area. So I just like to see this indicator in this area when the price reach important levels. When the price is facing with another components from our strategy. It can be trend line, moving average, previous daily high, or in opposite direction if we have reverse chart when the price is facing. As you can see here we have example, this is oversold area. When the price enter the oversold, it stay all the way pretty low, and oversold means that in one point the price will start to go up, which happened here. This indicator will not, the first time, as you can see, the indicator just try to break this 30% of RSI and it didn't succeed. It's kind of tricky, but with a little bit of practice it will become more easy. So this is main way how I'm using indicator. I just if the price is too high and I'm looking to sell, I like to see this indicator in overbought area, and I'm just looking and tracking when the price start to go in my direction. I like to see also support from RSI. There is many ways how to use it. Sometimes I'm using RSI divergence. What does it mean? So at the chart, the price, okay, let's start with this. Usually if you have two tops, when you connect them, the RSI will show you the same direction. So you see this trend line is pointing down, on RSI is also pointing down, and you will face with this in, let's say, 85% of the cases. But there is 5 to 15, let's say, percent when we have divergence, the RSI divergence. What this means? If we connect two highs, just like in this case, the price is pointing up. But if we have opposite direction on RSI, RSI is suggesting us that the price will, after this second high, will start to go down. This was example for bearish trend. Once when the price will go from small bullish trends and reverse in bearish, and it's just opposite for bullish example. Let me show you one simple strategy based only on moving average 200 and RSI. Right now we have all instruments on the chart, so we'll use this one since the price is above moving average 200, and this one since the price is below moving average 200. So in case when the price break moving average 200 and the price is all the time below moving average 200, what we are looking for? We are looking for that RSI is above 70% in overbought area. This means that the price is too high and it need to go down. So every time when the price reach and goes a little bit deeper in above 70% of RSI, once when it retrace, we are opening sell positions. For this looks like easy on the chart, but with a little bit of practice, this can be highly profitable. So on this chart, we have only two examples when this happen. The price is below moving average 200, and in this example, go above 70%, and on the way back, we should enter sell trade. And it was here. Yeah, if we enter here, we have two candles for profit. If we wait a little bit, the price will retrace, and then we will score a winner. So here didn't break, and then this was last example. Here it was a little bit of mess because of the news. You need to avoid to trade during the news. So this you would probably lose on this example. But this is the point. I hope you get it. Now I'm going to show you how to buy using this strategy. Every time when the price is above moving average 200, what we are looking for is that the RSI will go below 30% and go a little bit deeper. On the way back, we are looking to enter the buy trade. In this scenario, buy. So we should enter here, or let's say even here. What's wrong with this vertical line? Even here. So okay, we would be in profit. So this was second example. The price was in oversold area, and on the way back, you see when it's entered a little bit, this can be messy. And on the second example, break RSI 30 here. So we have one candle, and if we place stop loss here, the price is going against us a little bit, and then we are in huge profit. Again, this was news. So you have much cleaner market conditions when this works. But if you are practicing this strategy and looking at all factors, you can become profitable only with this. But it means it needs a little bit of practice. So why I'm using other components to help me avoid a lot of fake signals. So I like to mix them. I'm familiar with each of them, and I know how to use them. Once when I mix them, I get good results. So in my opinion, every trader should have at least 3 components: one candlestick pattern, one technical tool such as a trend line, and third one indicator. And each one of them should be something that you understand the best, something that you have, that you experience the most from the market. So this is the point of this framework. So I have 5 components. If you don't like some of them, you just don't believe in one component, you can replace it with your own component. If you don't like my trend reversal candlestick pattern, you can just throw this pattern and place yours, and you have all the rest components, and you have framework where you can add or remove one of the components. And this is the point of this framework. I hope this was helpful. Thank you very much. See you next time. Bye bye.